CNN reporter Matt Egan joins us live from New York. Wall Street is rebounding from last week's stumble. What are the latest developments?
Well, we've got the Dow at 28,000, the S&P 500 and the NASDAQ highest they've ever been. So it's safe to say that Wall Street's trade war fears are definitely fading. And that's because there's been some preliminary signs, some early hints that the United States and China could be moving towards that phase one trade agreement. Now, one of the biggest sticking points in the trade negotiations has been China's unwillingness to really aggressively crack down on the theft of intellectual property. The stealing of these corporate secrets has really been a major problem for companies in the United States, Australia, and other countries. Now, that's why investors were pretty encouraged by the fact that Beijing over the weekend, they came out and said that they would be willing to ramp up their regulations around intellectual property and perhaps even increase the punishment for people who break those laws. So that could be a sign that maybe China is willing to offer an olive branch to try to get this preliminary trade agreement done. But we should caution everyone that the United States and China, they've been close before with making this kind of a trade agreement, and they've only fallen apart at the last minute because there's just all of these structural obstacles before they can get a deal done. And even if they do get a phase one agreement done, it won't end the trade war. It'll just remove some of these trade barriers that have been erected in the last few months. So we need to kind of caution everyone that maybe the market is being a little bit too optimistic here.
And how much have US markets been helped by all that easy money from the Federal Reserve?
Right, so, obviously one of the biggest factors has been the fact that trade tensions between the United States and China, that has eased. So that has really helped investors. Also, the odds of a recession in the United States have gone down in recent months. Investors do think that the economy may have stabilized a bit. But as you mentioned, the Federal Reserve, all of this easy money has really also helped boosted markets in two ways. The obvious way is the fact that the Fed has lowered interest rates in 3 consecutive meetings. That does not directly offset the pain caused by the tariffs or the uncertainty caused by this trade war, but it does help sentiment. But the other thing that the Federal Reserve is doing is that it's buying bonds, a lot of them. It's buying $60 billion of short-term bonds every month. Now, this is not aimed at helping the economy or boosting the market. It's really to try to ease some of the stress in the overnight lending market that emerged in September. But the analysts and investors that I'm talking to, they say that all of this money coming in from the Fed is in fact supporting the market. The Fed's balance sheet is up by $286 billion since early September. It's now at more than $4 trillion, and it's growing.
Well, finally, let's get to something that really speaks my language. Louis Vuitton and Tiffany joining forces in this billion-dollar deal. Love it. Can't necessarily afford it, but, So tell us, is Tiffany's really worth, I think it was 24 billion Australian dollars?
Yeah, this is a big deal. Some of the biggest names in luxury goods here are teaming up. We got France's LVMH, which is the company behind Louis Vuitton, Moet Champagne, and Hennessy. It's acquiring Tiffany for $16.2 billion US. That's well above the initial offer of $14 billion for this 182-year, really iconic jewelry company. Now, what is happening here is that LVMH is betting that their deep pockets and their really strong expertise in luxury goods will be enough to turn around Tiffany, which has been struggling in its home market, and also it's really been struggling with the millennials. Their sales among younger Americans has not been all of that strong, but that's something that actually LVMH is known for being very, very good at. The other interesting thing here is that this deal is actually having an impact on the rankings of the world's richest people, because Bernard Arnault, the CEO of LVMH, his net worth has actually gone up to about $107 billion right now. That puts him just $200 million behind Bill Gates for the #2 spot and $3 billion behind Jeff Bezos, the Amazon CEO, as the world's richest person.
So he's struggling. Got it. Thanks so much.